Ever watched your stop loss get triggered right before the market moves in your direction? That is likely a liquidity grab. And today I will show you how to spot it before it happens and trade it using smart money concepts. Alright, okay, so now we are in TradingView. By the way, if you for some reason don't use TradingView yet, I have a special link to TradingView. You can use that link to try out the best version of TradingView for 30 days for free. And if you eventually decide to want to upgrade your plan, you will get a $15 bonus. But now let's take a look at how to trade the liquidity grab step by step. So first of all, right now we're looking at the Bitcoin, we're looking at the BTC on the 30-minute time frame. But you can find liquidity grabs and liquidity sweeps on pretty much all time frames. And the first thing I want you to notice about this chart is that we have a very clear resistance level right here. You can see that the price got reacted not only one time, two times, three times, four times here. So we have multiple reactions as resistance right here. And when we have such a clear resistance level, what many traders usually do, imagine traders that are going short here, that bet that the price will go down, they usually tend to place their stop losses either at the resistance, so somewhere around here, or just above the resistance. And this is actually very important because this is what the smart players will use when they perform their liquidity grab. So what smart money do here is that they push the price up into these stop losses. And what happens when the stop losses of short players trigger? Well, the short players have to buy back, which leads to the price going even higher. And as we can see, this is exactly what happened with this wick right here. Now, when the smart players successfully have pushed the price up, they can actually sell, which leads to this quick wick here to the downside. The smart money makes a profit, while retail traders like me and you get liquidated, and we get stopped out of the market with a loss. But how can we as traders actually trade and use this principle ourselves? Well, one of the best strategies and one of the most simple method to trade the liquidity grabs is to enter at the candle close just below the liquidity zone, or in other words, just below the resistance zone right here, where we had all the stop losses above. And as for the stop loss, the by far easiest and also a great place to set your stop loss, I hope you can see here, is to set it just above the wick, the highest point of the wick when it comes to when we are shorting, and the lowest point of the wick when we go long. So we set the stop loss just above right here, and using a simple 2-to-1 risk to reward, which means that the green area here is twice as long as the red area, would have your target right here. And as you can see, this trade played out perfectly. But now then, what about the liquidity sweep? Alright, so this video was just a very short clip from our full liquidity trading guide. To watch the full guide, simply click or tap on the screen right here. I hope I will see you all over there very soon.